Hello everybody and welcome back to another YouTube video. And in this YouTube video, we're going to be discussing, should you put your money into a TSP or a normal brokerage? Now, a TSP or the Thrift Savings Plan is just a retirement contribution plan. It's for most government employees, but it's mostly geared and popular towards military service members. Since I've joined, I've heard countless people talking about, make sure you open up a TSP, make sure you're contributing into your TSP, but is it really worth it? In today's video, we're gonna find that out. But before we do, I would please ask that you sink that like button to Davy Jones's locker. And once you've done that, then we can go ahead and get on with the video. Now, the TSP itself is not an actual fund or anything like that. So when you hear someone say, put your money into your TSP, it's like them saying, hey man, make sure you get your 2 free stocks down below when you sign up with Webull with my referral code. No, but seriously, a TSP is just more of a vessel where you can hold either a traditional or Roth IRA. And those are what you will be putting your money into. Just to briefly go over what a traditional and Roth IRA are, a traditional Roth IRA is essentially if you believe taxes in the future are going to be lower, so you would rather not pay any taxes now, well then you would pretty much wait, and then once you become of age or of older age of retirement, then you could pull out your money because you will be saving more money because you believe that taxes were lower, and if they are lower, then you didn't have to pay the high taxes today. Now, a Roth is sort of the opposite. You're actually betting that taxes are actually at its lowest right now and they're going to get higher in the future. So you would rather pay your taxes right now and pretty much contribute whatever money you have after taxes, so that way you can pull that money out when you're 59 and a half years old, tax-free. Both accounts ideally you want to keep until you're about in your retirement age, and once you do, you finally get to enjoy that sweet compound interest. Now, I'm pretty sure at this point, many people watching already know what sort of investments are out there. Well, let's see here. We got CDs, bonds, individual stocks, ETFs funds, the list can go on and on. But what exactly is in a TSP? Well, the TSP tries to make that simple and it breaks it down into 5 core funds. There's a 6th one, but I mainly want you to pay attention to these 5. Those 5 funds are going to be the G Fund, F Fund, C Fund, S Fund, and the I Fund. Starting with the G Fund, it's mainly there just to keep up with inflation and on a good day, get past inflation. There's almost no risk with this one because you're pretty much just investing in a multitude of government securities, so there's pretty much almost a guarantee that you're gonna make your money back, plus just a little bit extra. And it's done its job quite well. It's been able to keep about a 4.82% ROI on your money. Now, the F Fund is a step up in risk, but a little bit more higher return. All the F Fund is a mirror to the Bloomberg Barclays US Aggregate Bond Index. And that index is essentially something that investors use to sort of keep track of the overall US stock market bond. This fund has about a 6.18% return on your money. Now on to the C Fund, or my favorite fund. The C Fund represents the S&P 500. I'm pretty sure many of you know what the S&P 500 is, and for those of you who don't know, it's basically the top Fortune 500 companies in the US today. The C Fund holds the highest return on investment with about 10.88% since its inception in 1988. On to the S Fund. This fund exposes you directly to the Dow Jones US Completion Total Stock Market Index, which is about right now 3,300 companies. This has an ROI of about 10.24% since its inception. And the last fund is going to be the I Fund. This index holds stocks from 21 other developed countries and exposes you to not just US stocks. And this one has an ROI of about 5.16% since its inception. Now, we can talk about which funds are better in another video, because there is a lot to talk about that there. But sticking to the core subject of this video, now that you know what a TSP is, why should you invest in it? I mean, all these funds are really just a copy and paste of investments you can already get with other brokerages like Vanguard or Charles Schwab or Fidelity. So what makes TSP special? Well, a great advantage right off the bat is that your contribution limit is already greater than any normal brokerage. As of today, March 5th, 2021, you can contribute to a Roth or traditional IRA with a normal brokerage account of up to $6,000, and that is per year. But with a TSP, you can contribute up to a whopping $19,500 per year. So over the course of 4 years, if you are able to max that out, the $6,000 brokerage account would only add up to about $24,000. Compare that to the $78,000 you can potentially have invested with the TSP. Also, another thing I really love about the thrift savings plan is how simple it is. You don't really need to do a whole lot of research because the TSP has already done it for you. All you really need to worry about is which fund in the TSP sort of matches with your risk tolerance and can potentially maximize your gains and profits. So in my opinion, this is amazing for military members or government workers who know nothing about the stock market but at least just want to start investing. Well, the TSP already offers it for you with already pre-made funds that have a pretty good proven track record. Now, a while back, the TSP would only let you contribute a percentage amount of your paycheck, which they actually would max out at about 60% per paycheck. But thankfully, they have removed that, so you can actually now contribute either a percentage or a dollar amount, and the limit is pretty much only up to whatever your base pay is, which is a lot better than 60%. So for example, if your paycheck was $1,000 and you wanted to invest more than 60%, well, too bad, you can't do that. And you couldn't even use a dollar amount. But now you can actually do a dollar amount, and now you have the option of, instead of investing 60% of that $1,000, now you have the option to invest that entire $1,000. And lastly, which is probably the best part of the TSP, is that they will actually match you 5% if you put in 5% of whatever money you put in. Now, disclaimer, technically it's not 5%. How it works is the first 3% they will match you dollar per dollar, and then the last 2% they will match you 50 cents per the dollar. So let's say, for example, your base pay is $1,000 and you contribute 5%. That's $50. And then the military, however, comes in and they give you another 5%. Well, technically 4%, really. So that right there is the military giving you an extra $40 just to go and invest. This is the government encouraging you to just get into the market, because that honestly right there is pretty amazing. And for new investors who don't really have a lot of money but just wanting to get into the markets, this is an amazing option because they essentially almost double that 5% contribution. Again, I do need to mention that you can only do this with your base pay. So that extra money with your BAH and your BAS, that's not technically considered part of your base pay. So if they do match you 5%, it's not going to be going into your BAS or BAH. It'll just be sticking to that $1,000 base pay. But hey, it's literally free money. So with all those perks, this has to be probably the best way to invest, right? At least if you're in the military or work a government job. I mean, at this point, it seems like there's no downside. Not quite. I have actually two problems with the TSP. My first problem is the selection. Sure, if you're a first-time investor and just want to put your money into secure funds that, like I said before, have a pretty good track record, then this really isn't a problem. But when you leave that beginner mentality and you finally want to kind of start venturing out into other opportunities, let's say for example with individual stocks or just different funds, well, too bad, because those 5 funds is all you get. But my biggest beef and broccoli with TSP is they actually choose when you get to buy into the market. TSP will only let you buy into the funds that you choose on the 1st and 15th because that's when you get paid. You don't have the option of just choosing whenever you want to put in your money into the markets. Now, if you're a set it and forget it type person, then again, this may not be a big deal to you. But as you start getting more experience in the market, and let's say you see a dip and you want to buy into that dip, well, you can't. Unless it's the 1st or 15th, then you can. And two, it's not like a brokerage account where if you just want to buy into a fund or you want to buy into a stock, you can just set the exact number that you want right there and boom, you know, dollar per trade or stock or whatever. The TSP, you kind of got to already have it set through, so it automatically takes whatever amount of money that comes from your paycheck and it just throws it into these funds. So you can't be super specific in what you're buying. And in my opinion, if it wasn't for those things, then yeah, the TSP would be the ultimate investing platform. But because of its inability to diversify its investments and the inability to buy into the markets whenever you want to, which also kind of includes the amount, and the third one honestly being because you could replicate the exact same funds that you can in the TSP into your brokerage account. I mean, the C fund is just the S&P 500. If you want to invest into the C fund outside of the TSP, just buy a separate S&P 500 share like VFIAX with Vanguard. Then with all those, I would actually say a brokerage account is better. But there's an if. That if is if you don't have the money to invest in either and if you had to choose one. And now this is what I would do. I would only invest into the TSP 5% so I can have my contributions match that exact same 5% or 4%. And then at the same time, go and invest with another Roth IRA with another brokerage. Because the beauty of all of this is that you actually are able to have 2 Roth IRAs with this strategy. And if you have the ability, you could actually max out both funds. So just to recap real quick, I would choose investing with an IRA with a brokerage account as my main source of investing, but also invest 5% of my TSP so that way I can get that 5% matched contribution. And I would choose a C fund just because I personally like the S&P 500. And then if you max out your Roth IRA with your brokerage account of $6,000, then you can go ahead and invest whatever else you want to with your TSP. Both have their advantages and disadvantages, but I would say the TSP is a very solid, good place to start, especially if you have almost no idea with what you're doing when it comes to the stock market or investments. Not the best option, but then again, a very good start. And if you want to start off with a TSP and not go with a brokerage account, that's completely fine. Maybe once you start becoming a little bit more confident with stocks and investing, then you can start slowly transitioning from your TSP and kind of going off in your separate way and making your own investments and choices with another brokerage account, while still at least contributing 5% to your TSP so you can get that 4% match. But yeah, that is going to be all for this video, you guys. Thank you so much for watching. Please click that subscribe button if you think I've earned it. Don't forget to sign up on Webull and get your 2 free stocks. Also, don't forget to sync that like button to Davy Jones's locker, and I will see you guys in the next video.